On to the Brent Crude, which falls below $75 per barrel, erasing its 2024 gains to its lowest intraday price since December 2023. Now, this is owing to a slowdown in China's economy and the likelihood of the OPEC increasing its oil production in the month of October. China's manufacturing contracts fell to a 6-month low in August. Remember that China is the second largest importer of crude. Also joining us on the issue is Nadia Elbilassy, who's the senior market analyst at Equiti Group. Hi, thank you, Nadia, for joining us today.
Thank you. Hello.
Right. Nadia, tell us, the benchmark was as high as $87 a barrel as recently as mid-April. Now it has fallen below that $75 a barrel mark, which is the lowest since, December 2023 intraday. Shortly after several the highs that we saw in the month of April was shortly after several members of OPEC Plus producers group said that they would cut the production for more than 1 million barrels a day. But a softening U.S. economy and continued fragility amongst its banks and as a weak manufacturing data in China have really turned the investors much more bearish and caused the refining margins to take a slump. Now, what does this mean? What does this say about the health of global economy?
Yes, so we obviously, after the news that that 8 members of OPEC Plus are going to start increasing output starting in October, we saw a dip on oil prices. Already, oil prices have been ranging in a very tight range, sparked by the fact that already factored in interest rate cuts. So the cheer for interest rate cuts has been fading away, and also the fact that the 2.2 million barrels production cuts are going to be coming to an end in 2025, and also that they haven't been really supporting prices that much over the past few months. Even Libya halting production over the course of the past 2 months also was supposed to support prices, but it hasn't. So I feel like oil prices have been quite under pressure ever since markets already factored in the 2.2 million barrels production cuts. And I think that the markets were needing more, and also the fact that the U.S. is producing more oil than it has in recent months as well is also one of the key factors that's pressuring oil prices. In addition to that, data from China that have been showing or reflecting delayed recovery in China in terms of the manufacturing, in terms of the factory production, all of these indicators slowing down are also reflecting a lagging economy, and this is affecting oil prices on the negative side.
Nadia, also, what does it speak of the demand in that case, the demand across the global economy? And is it likely to see revival anytime soon?
If we see better data with all the economies now that we're seeing at the easing cycle start in all the economies, this will definitely be reflected in the demand, and we will see more demand. But up until China resolved the housing market issue, the real estate issue, like a few months ago, there was 10 banks, they went bankrupt. So I think that there's still a lot of issues. They're basically being compiled, and that's also affecting the projections of oil prices. So I think now it remains in the hand of OPEC Plus by end of year to announce any rate cuts, any production cut increases. This will definitely be in favor of oil prices.
Right. Also, finally, Nadia, how is the slump in oil likely to impact the oil-producing companies in India? What is the impact that you see spilling over to Indian companies?
We already see that the energy sector has not been performing well with oil prices down. So I think this will definitely further on proceed till October, since we have this negative news now of markets are taking the increase in production as negative news. So this will definitely impact oil prices. It will also impact oil companies.
All right, Nadia, thank you so much for taking the time out and joining us on Russia.
If you like this video, then like, share and subscribe to ET Now.